Mr. Investor Lot, and we're back today, baby. We're going to be talking about PaySafe. So this is a juicy stock that just came on our radar. I'm not a financial advisor. Make sure you do your own due diligence. So as you can see here, it's had a nice juicy run up over the last few days since they've confirmed that they're going to merge. So this is called Foley Transmean Acquisition Corp. It's basically number 2, and they're going to combine with PaySafe in a $9 billion deal. So they've entered into a definitive merger with PaySafe that would give it an enterprise value of $9 billion. PaySafe provides a global payments platform powering digital wallets that can handle a run rate of about $100 billion in transactions annually. So let's get straight into this. Introduction into PaySafe, 75% plus e-commerce and integrated organic revenue. This is a juicy little stock, and I'm going to be looking to put a little bit of money in here. They're a leading global pioneer in digital e-commerce. So highly differentiated business to business and business to consumer global network with a powerful suite of digital wallets, e-cash and integrated processing solutions. They've got significant growth opportunities and a massive TAM with expertise in the highest value verticals. So if we take a look here, TAM is total available market. It's got a long history as a global market leader in the iGaming payments, and they're well positioned to capitalize on the expanding US market. So they've made in total 103 billion total volumes in transactions 2021 they're planning, and they've got $1.5 billion in organic revenue. So these are the 3 main squeezes for them. They've got 1, 2 and 4. Where's number 3, baby? So here we go. These are the solutions that they provide. So they've got the PaySafe eCash, which is basically a digital currency solutions empowering online, mobile and in-app commerce for gamers and cash consumers. They've got some big games down here. Fortnite, Twitch, Spotify, these are huge companies. Ooh, so they targeting, the Gen Zs, the millennials, the underbanked consumers. And what they're doing is they've got digitalization of cash, prepaid solutions and invoicing solutions. The next hustle, which everybody's been grinding on about, is the digital wallet. So they've got a global stored value digital wallet. A network of digital wallet solutions enable users to upload, store, withdraw, pay, all of this from a virtual account, making it really easy to, have mobile and in-app commerce and peer-to-peer money transfer. So if we look below here, you can see they've got some big companies. DraftKings has been on the radar. Bet365 is a massive company. William Hill and Betfair. So all of these are like UK companies that we can see here, and they're gambling companies. Lastly, they have here number 4. They've got PaySafe integrated processing. So they've got point of sales, e-commerce solutions for SMBs and e-commerce sellers. As we know, e-commerce is always growing. So this is vital. They've got presence across US, Canada and Europe. So yet again, they're working with DraftKings. nPower is actually an energy company, and MindBody. In terms of scale, let's take a look at them. So they've got attractive scale and financial profile. With over 3.8 million active users in their digital wallets, they've got over $1 billion in deposits already. This is 100% e-commerce integratable, and you can see that their volume is $23 billion in total. They take just 1.9% of that, that's the take rate, and they've got organic revenues of 441 million. In terms of eCash, you can see they've got 12 million active users already. 650,000 distribution points. This is 100% integratable for e-commerce. They've taken $5 billion in total transactions, 6.8% take rate, $318 million in organic revenue already. And here for PaySafe, for the integrated processing, they've got point of sale stuff for 250,000 merchants already. They've got 75 billion in the total intake that they've been processing. So this all totals up to 103 billion that they've processed. They've got 1.5% of it, so that's $1.5 billion. So they launched in 1999 in Europe and the rest of the world. They're a global leader with over 1,000 operators. They launched in Canada in 2010 and launched in the United States in 2013. So as you can see here, they're a global leader in the iGaming industry. So in 2020, their estimate was $77 billion, right? That's the total market volume. And they said that this is going to increase to $135 billion. And the same with Canada and the United States. They're predicting it's going to have a monumental growth by 2025. So when discussing their integrated cloud technology, they put cybersecurity in there. And I'll tell you why this is so important for them to have this. Handling money and transactions can be tricky. When you have a platform, you need to make sure you don't get hacked. So PlayStation Network got hacked 2.2 million credit cards at risk. They want to make sure there's no hiccups, and they want to prove that their model is safe and secure. They can do this by managing their risk and compliance with many international and local bodies. So how big can they grow? Well, in the iGaming industry alone, it looks very attractive. So they've already got 60 plus iGaming customers, DraftKings, they've got loads of lottery and gambling kind of networks and sites all online. So if they're targeting this iGaming market, in 2019 it was worth $3.4 billion. And when they're looking at 2025, what it could potentially become, they're saying on the upside it could be $47 billion. With high growth and profitability in their site, can they become the new Square Inc? They're focusing on specific niches, but they can see themselves growing into certain markets. Here in the gaming industry, for example, and social media industry, they're looking at the biggest companies. They've got Twitch, Spotify, YouTube. All of these companies are in growing industries. So many people want to become gamers, social influencers. Over here you have Roblox. Kids want to spend money on Robux so they can enjoy the game. So these are some massive companies that they're currently working with already. And their leading capabilities position them well to actually access all these other markets. You've got the education market, you've got travel, financial services, video gaming, rental, social media. All of the markets they can see themselves positioning in as consumer behavior starts to adjust and we start to purchase more online. We want to find a safe body to put our money through. So they see themselves as being that safe body. So let's take a look at their previous results. They've indicated that they have strong performance and good financial results. Double-digit growth, they're saying. So they're saying this is a compelling investment opportunity. You should be putting your money in this. $103 billion in 2021 transactional volumes. 1.5 of that billion is organic revenue. They're saying that they have, very strong growth at 11% annual organic growth. They have high margins as well, highly profitable model with significant operating leverage, and they're saying that their margins are above 30% and they're going to take the path to 35% and above. With a strong cash conversion, they see themselves as making a lot of money because they do not require a lot of capex. They don't require capital expenditure or balance sheets in order to make that money. When looking at their double-digit growth, they're saying it's consistent. So this is the volume in the billions. They've got 2018, 2019 here. They've seen a 12% growth. And they've seen that it's grown from $87 billion in 2018. They're predicting that by 2023, they're going to be making a whole load of money from processing and digital wallets. They're going to be going all the way up from $87 billion to $135 billion in transactions. That's in volumes, right? We're talking volumes here. So if we go over to their organic revenue, we can now see that they've also been consistently growing. They've grown 13% between 2018 and 2019, and their revenue is going to reflect that. They said by 2023, they're looking at $1.8 billion. So they say they are a highly diverse business. In segment, with processing wallets and eCash. In geography, where they're in Europe already, they're in North America, and they've got rest of the world as well. And they've also got a massive vertical, where they can diversify via e-gaming, SMB, and emerging verticals. And they say they do it all, baby. They compare themselves to PayPal, Nuvei, all of these other competitors, and they said they've got e-commerce capabilities, two-sided networks, vertical focus. They want to expand globally. They got it all. And here, this was really nice to look at. I can see Square in here. So they're saying they want to look at all these kind of traditional payment methods. They want to look at integrated services, and they want to access into all of these kinds of markets. And they compare it to what people are currently trading at and their price, and they're saying basically they're good value right now. Last but not least, let's look at the total market. So they're saying they're accessing a $58 trillion market. This is the potential that they have. This is the potential for growth of the industries that they can grow into. And they're just a small position right now. So imagine where they could be in the future. So I was actually one of the early investors in Square. I had it at $9 back in the day, and if I held it to today, I would have had 22 times my money. Sad, but it happens. If we look at the total US gambling market size, it's $59.6 billion in 2020, and they're looking at that industry, right? If we look at the gaming industry, PC gaming alone is $37 billion, while the mobile gaming industry has an income of over $77 billion. And by targeting these niches that are going to continue to grow for many years to come, which is popular with our generation, imagine what they could potentially become. As always, make sure you do your own due diligence. I think I'm going to open a small position in these guys at first. If I had more cash on me, I would have loaded the boat, baby, because for me, they look like a very juicy stock. This is not financial advice. Mr. Investor Lot, over and out.